everyone, my name is Petra and together with my colleague Niamkey, today we'll be hosting Breaking Fintech, where we're going to discuss the latest news in the space of fintech.
Cool. Thank you, Petra, for this introduction. I'm very happy to be part of Breaking Fintech, where today we're going to speak about CBDCs. Have you ever heard about CBDCs? Maybe yes, maybe no. This is one of the reasons why we start first by defining what are CBDCs. Second, what are the use cases of CBDCs? Third, what are the pros and cons of CBDCs? And to finish, thanks to our super speakers, we're going to have an overall idea of what are they, how we use them in the world and the current situations about CBDCs.
And we're going to hear some wonderful use cases from Singapore, the US, Luxembourg, and Belgium. So today's topic we will discuss with our wonderful guests is CBDCs. And you might wonder what is a CBDC, a very scary term. So I'll try to give a brief introduction. So CBDC is a term describing central bank digital currency. In other words, it's a fiat currency issued by central banks in digital form. In this discussion, we'll focus mostly on the retail aspect of the CBDC, because CBDC doesn't have to mean to cover just banknotes, coins, or cash, or bank deposits. It can have a much broader definition. It can also cover the other parts of money supply management. Just to give you a brief motivation why we're discussing it, by the survey conducted in 2019 by the Bank of International Settlements, 80% of central banks stated they are going to investigate or develop some means or some projects related to central bank digital currencies. And every 10th bank in a survey, which would represent 1/5 of the world population, stated then that in next 3 years they're going to run some kind of a CBDC pilot project. So going forward with that, we'd like to invite our speakers to introduce themselves. So we may start with ladies. Manal, please.
Thank you so much for having me. It's a pleasure to be here. I would like to thank the Loft for the invitation. And it's an honor to share my insights and experience with your audience. So as for myself, I'm Rifki. I'm a PhD researcher in the area of CBDC. I investigate how central banks can optimize their monetary policy strategies in a CBDC environment by researching the strategic interactions between central banks, commercial banks, and how different policy choices such as interest rates and open market operations can affect the market. For my professional, I am a director at Multiverse Labs. It's a decentralized AI ecosystem that enables the communities to build, train, and deploy machine learning apps. And I'm also a venture capitalist. We invest in blockchain and Web3 projects. Thank you for having me and looking forward for a fruitful conversation moving forward.
Yeah. Thank you for the introduction. Cool.
Yes.
Who we have next? Uzair, do you want to go next?
So my name is Uzair. I am the founder and CEO of Cent Finance. We build Web3 solutions, so different tech stacks like Ethereum, various L2s and side chains. So we're building DeFi essentially, in short. And so I come at it from a very practical and execution-focused perspective. And our company is currently based out of the UK. And I myself am based in New York. I've been working in Web3 and DeFi for now almost 5 years. Much like Manal, I started off from an academic side during my MBA at at Imperial College in London, and started to sort of fall into this space. But yeah, very interested to hear the various diverse perspectives from our other speakers today, and eager to share mine as well.
That's great.
Thank you. Who do we?
Maybe Bernard.
Bernard,
Maybe
yeah.
next.
Hello, everybody. My name is Bernard Nicolay. I'm passionate about finance and education. I do not know exactly in which order. It depends on the different stages in my career. I am an ex-banker turned finance professor and seed investor in Fintech. Currently, I lecture at Solvay Brussels School of Economics and Management, at Paris Dauphine, and at Conservatoire National des Arts et Métiers. And I'm very happy to be here, as CBDC and blockchain and finance are topics of great interest for me. Thank you very much.
I believe Bernard has discovered the multi-clonage power.
Oh, yeah.
All these activities. That's very nice.
A lot of activities.
Yes.
Juergen, can you please go next?
My name is Juergen. I'm a fintech entrepreneur from Luxembourg. I built up my first company starting 2012 in Luxembourg, so more than 10 years ago. It was an e-money institution, so a financially regulated entity, one of the first three in Luxembourg of that type. In the early part of the last decade, we were actually working together with Kraken and Uphold. So in the early 14 and 15s, building up relationship with Bitcoins. We were the bridge between the crypto crazy guys and the old-fashioned banking system. Everything legal, everything regulated in Luxembourg, thanks to the open innovation culture there. And since then, we exited the company to Daimler, and now we are working on a banking management system for Treasury. And since we got involved in Bitcoin and especially Ethereum at the early days, it's an ongoing topic. And CBDCs is also pretty nice. I'm very looking forward to the discussion, and I'm happy to be invited and share my knowledge. Thanks.
Thank you, Ryan.
Thank you. And last but not least, Tobias, can you please introduce yourself?
Sure. I'm Tobias. I'm a co-founder of Stokr. I'm also in charge of the product, which you can see on the internet. It's basically an alternative investment marketplace we've built over the last 2 years. And what we do is basically we help connecting investors with projects to seek financing. And you can come on our platform and invest in different alternative investment projects, from SME financing to alternative investment funds. Also, we have created different products which are very innovative in the market, like the Bitcoin hash rate securitization node, where you can directly invest into Bitcoin mining via Luxembourg securitization vehicles. And why I'm probably here today is because we do all on blockchain. So we tokenize the securities which will be issued to the investors. So we really make use of the direct link between the issuer and the investor. And we believe that's the future of capital markets. We have integrated 3 blockchains so far. So we started with Ethereum, then we integrated Liquid as a sidechain of Bitcoin, where we mainly work right now. But we have also integrated Algorand, and we look obviously in other blockchains to tokenize. So that's basically from my side.
Wow, that's cool.
Thank you. So I believe we're done with the round of introductions. So let's start with discussing the super hot topic these days, CBDCs. My first take on it would be, I gave it a brief definition, but I might left out some things. So please feel free to add what's your opinion on CBDCs and what are the use cases from the countries you're coming from, as we have a very international group today. Do say what you found like standing out with CBDCs based on your geographical location, and again, what is your opinion of this topic?
And you spoke about something very interesting in the beginning, the fact that we're more focused on the retail part. Maybe you will tell us more about the adoption part, because until today, I'm still surprised how the adoption is going to be. Because when you see the different countries that have already tried to, let's say, issue some CBDCs, like Nigeria, for example, today, we have very few people using it because the population prefer, for example, to use Bitcoin.
Actually, 0.5% of population of Nigeria wanted to use their CBDC. And you know what actually happened?
What?
The moment they introduced it, the banks, in order to enforce the use of CBDC, stopped the cash withdrawals on ATMs and from the bank accounts. So what happened was riots and protests because people couldn't get cash on their hands. And then 50% of population switched to cryptocurrencies because it was way much easier for them to control the access to their money once they couldn't get hand on their cash.
Yes, and I remember this period you're talking about, it was not that far away, and we had some riots just because of that. So we have so many questions rising from this adoption point. So maybe today you will make things more clear for us and for all our audience, people hearing us and watching us.
And the second remark, they're also running projects for CBDCs in the United Kingdom, Digital Pound. You're probably all familiar with that. Japan lately issued a report on the pilot CBDC project they had, and also European Union is testing out and deciding on whether they want to pursue or not the CBDC concept of digital euro. So please, let's go. Give us your opinions. We're very eager to hear what you think about the topic.
My opinion on what's happening in the UK and the US. It's the digital pound is something that's been a part of the discussion for now a number of years, and similarly in the US, I think in November there was a paper published by the SEC and a number of other organizations interested in collecting feedback from entrepreneurs, institutions, and the general public. And I think the main sort of issue that we're going to see is something that Niamkey already touched upon, is that adoption is going to be difficult. First off, coming out with a digital pound almost 10 years later, from the time that Ethereum was launched, and almost 15 years later from the point that Bitcoin was launched, it's slow. That's the first point. And so you already have users that have formed habits that are used to using specific networks or wallets or services based on those networks. So that I see as the first step or the first challenge in terms of adoption. The second thing is, aside from being slow, there's still no clear path. The FCA keeps publishing papers to collect more and more information, but I see little to no sort of actual progress towards launch. It's great to have conversation and collect thoughts from the public and entrepreneurs and institutions, but there's also something to be said about rolling something out and testing and seeing how it actually does and who is and is not interested. And I feel like at this point it's just a glorified paper that's being written, and by the time we actually see something come out from one of the main economies, whether it's in the European Union or UK or in the US, I think it's going to be so far down the road that by that time, who knows, what kind of technology will be entering mainstream crypto and DeFi, because I personally think that the biggest hindrance to adoption is the fact that it's just so slow and so late that by the time it comes out, it's just not even impactful. Sorry, it's an extreme view, but I think it kind of gets people talking. So I'll pass it back to you guys.
Okay.
That's very, very great. It's very nice to hear that, because it's a different point of view compared to what we used to read from people like trying to explain that CBDCs will have the benefits, but you're just waiting the plus and the minus that we can have. Is there, we know that you're an entrepreneur also from the US, from the UK, and I have a point from the US, for example. I have heard about the app, the Fed now, that will be released in July. Do you think the main purpose of this app is to go for adoption, or is it just something that the Fed think is necessary for the population?
I think at this stage, it's really just them trying to show that, hey, look, we're doing something. But, you know, in order to get adoption, even from, you know, even for something like a CBDC, which I think is, you know, it's going to be something that's going to be a can that's being kicked down the road further and further. But I think the big issue is going to be, you know, giving people clear guidelines on what they can and cannot do. So ultimately, I look at CBDCs as a way of connecting what we already have in the crypto world and ecosystem to the existing financial system. And you know, CBDCs want to try and play a role in not only connecting that, but also providing an alternative. And so from my perspective, I think, you know, it's one part of the equation. It's not the full picture. And so, you know, any sort of attempt, whether it's an app or a pilot, it needs to come with a more sort of holistic plan and roadmap to show people the true benefit of it. At this stage, you know, based on what I've read from the papers that have been issued, the communication that's come out of both the FCA and the Fed, and you know the various bodies that are involved in the US and the UK, it's just very academic, very how should I say it? It essentially takes the benefits and attraction of using crypto and stable coins out of the picture, and it essentially replaces it with what we already have. So it's more of the same, just you know, version 2.0.
That's a very good point. That's a very good point, because I believe mainly CBDCs are introduced as the countermeasure for stablecoins, or let's say to be a market competitor for the emerging cryptocurrencies and the ease of payments in cryptocurrencies, of course. But I would love to know what's Manal's take on this, because Asia is always one step forward ahead of all of us. So I would really like to know what's your opinion on this topic, since you're coming from Singapore and you're also being a researcher in this area. So I believe your insight would be very valuable in contrast to maybe what's happening in US and UK.
Yeah, sure, absolutely. Singapore is always taking bold steps to establish itself as a global hub for digital assets, innovation, and collaboration. So I guess, like, you know, Singapore also is like a highly banked country with a very efficient banking system. So the central bank, the MAS, has been very clear that they have no clear vision for, like, you know, this retail CBDC. They even claim that, like, you know, there is no real use case for the retail CBDC, since the existing like banking system is already efficient. As I said, we have pay now, transferable money without, like, you know, in seconds. So the MAS has been clear that the retail CBDC cannot be just an exploratory project. So we have two projects now in the MAS. The first one is the ORCID project, which is a multi-year, multi-phase exploratory project. They examine more the various design technical experiments for the retail CBDC or the programmable money, but again is just, like, you know, an exploratory project. Just in case things change, they will have already like a framework for retail CBDC. However, the most I guess interesting project is the Guardian project. It has been launched very recently, back in November 2022. So the MAS, along with JP Morgan, their department Onyx blockchain, DBS, I believe, and SBI Digital Assets, they have completed the first pilot for the project's guardian. So the project, it aims to explore how DeFi or decentralized finance can benefit, like, financial markets. So in other words, like, they tried out DeFi for foreign exchange and government bonds, and they're using, like, platforms that we all know in the crypto space. Aave, the leader for, like, the DeFi space, the first, I believe, like, the biggest DeFi projects in the cryptocurrency space, Uniswap, and they have built the whole pilot on the Polygon blockchain. Again, it's very controversial for big institutionals to use Polygon because it's mainly used by I may say retail or a use case. Yeah, big brands, they use a Polygon blockchain, but they wanted to have that exposure into less gas fees, given that, the Ethereum, for example, blockchain is more expensive than the Polygon. So they used, of course, like, standards like ERC20, but to make sure everything was legal, they have introduced Trust Anchor. So for me, this is one of the first kind of pilot where DeFi meets financial market, and I believe it's a big step moving forward for bringing DeFi and traditional finance to merge and to create opportunities. So it's all about making transactions faster, more secure, and more accessible. So when we have these big banks using DeFi protocols like Aave, Uniswap, it shows that Singapore is, like, leading the way by exploring these possibilities. Again, this is just a pilot. This is just, like, a test to see how DeFi can be used. But again, I guess is a very big step forward. They even played around with tokenizing assets, like turning the Singaporean dollar deposits and the Japanese yen assets into digital tokens. So just to make, the transactions easier and on a real time. So moving forward, I guess we're gonna see more pilots like this in other jurisdictions. I believe the MAS, they are planning to team up with France and Switzerland for cross-border CBDC. And here in the ASEAN region, I believe there are, like, a lot of uh, discussions and possibilities to have cross-border payment between different ASEAN countries, and also with China, because, like, China is the leader for, like, CBDC. They started sorry.
Yeah, the
Yeah,
digital
exactly. Yeah. So I think they have been the leader, despite, like, the political difference between Singapore and China. I guess we're gonna see very soon cross-border payment between countries in the Asian continent, but also across continents.
This is something huge to see that we have pilots with big players using public blockchains. So I have just a little question, Manal, because you've pushed my curiosity a bit far. From your point of view, do you think that it's useful for a big player to build its own blockchain than using a public blockchain? I know it's still a pilot, but from your point of view, what do you think about that?
I guess, like, a private blockchain is always very useful for political reasons, of course, for security. And we saw, like, a lot of attacks happening in the blockchain space, either in Aave and the Polygon itself, I believe. I may be wrong, but, many major public blockchains have been attacked. And I believe most of, like, the central banks, CBDCs, the projects, they are aiming to build it on DLT, distributed ledger technologies like R3 or Corda, rather than the public blockchains that we have in the market.
Mm-hmm. Yeah,
Thank you.
So I
understand.
believe this is just, like, to show to the public that they are open to work with big companies in the crypto space. But this is, again, I believe, is just like a pilot. And JP Morgan, for example, Onyx blockchain, they have a whole division where they are building their own blockchain, and they are not using any other public blockchain.
Okay, I believe there's a reason for that, because you want to keep state matters private, not using public infrastructure. But what occurred to me that we might do settlements between countries on public blockchains, because then we have a decentralized infrastructure where we could switch from one means of payment to the other means of payment, from one currency to other currency. But that brings me to our third speaker. I would be very curious to hear what's the opinion of Bernard on this topic, since he's also a researcher in this space and very experienced. And what's the state of digital euro, and what do we have in Europe today?
All right, thank you. First of all, I would say that I'm impressed by what Manal has just said, and about the innovation that happens in Asia, because it's great, and it's a learning point for all of us and for all the countries. So what's the situation in Europe and in the Eurozone in particular? Well, the ECB, the European Central Bank, is working with the national central banks of the euro area, it means 20 countries, to investigate whether to introduce a digital euro, yes or no. And the philosophy, the Eurozone is just taking time. The project in its investigation phase has started in October 2021 and is expected to conclude the first exploratory phase in autumn this year. So it's proceeding very carefully. What we know is that, or the principles are that it would be this digital euro, a central bank digital currency, what you said, Petra, so a kind of electronic equivalent to cash, not replacing, but complementary to banknotes and coins, as far as retail is concerned.
This is
and then you've got the question, and then you've got the question, of course, as the payment infrastructures and digital money are already very well developed in the Eurozone, you might ask the questions about the use case at the end of the day for retail. But okay, that's what's in the principles, and it would be for all of us in the European Union, in the Eurozone, an additional choice about how to pay. So an additional one compared to other ones that functions quite well, something secure, user-friendly, potentially also an anchor of stability for payment, the monetary system, all the things, the potential benefits. It's also explained that it would strengthen the monetary sovereignty. And this is also in line with what you said, Petra, that maybe for some, those projects might be developed in a sense as a reaction against stablecoins or private stablecoins or crypto assets, with the arguments of sovereignty. And everything is under investigation. So the accessibility, the robustness, the safety, the level of privacy. So this is the situation now. There are work groups, including experts from the various central banks. I'm very proud. One of my students of 2 years ago joined the National Bank of Belgium and now is part of those working groups in Frankfurt. And it's proceeding, as I said, so exploratory phase and first conclusions, go, no go, for a potential implementation phase and a pilot first in the autumn of this year. That's the soonest. This is what I can say at this stage.
Thank you. I have an additional question or thing to add. So, as I've seen by the proposal of European Central Bank, digital euro will be limited to 1,000 transactions, amounting up to 50 euros, and you will be able to hold up to 3,000 euros on your digital euro accounts. I find those, let's say, restrictions or limitations quite interesting. But I believe we can continue this discussion in dangers and to further explain what's the motivation of European Central Bank to keep it that way.
Why do you think this limitation is interesting?
We can discuss it further. Okay, now we go with the fun parts, and then we go with the less fun parts of the story.
You don't want like to put too much in our heads there.
Not immediately.
But Bernard, you touched upon a very interesting point, because you spoke about the infrastructures that we have already, which are working very well already. We have now several apps and systems to make payments and transact money. What if now we have the choice also for the currency? Because we could have only one bank or only one app to transact our money, but we have many of them now. So maybe this is part of the evolution. We'll be able also to choose on which currency we would like to transact the money.
Possibly, yes, you're right. And again, in terms of principle, the digital euro is conceived as being a complementary payment mean for the people in the eurozone. And coming back to the potential limitations described by Petra, the idea also is not to disrupt the banking industry. Not to provoke, not to trigger bank runs, or just because the digital euro might be considered less risky, for example. So it's my understanding that there are a lot of potentially conflicting objectives, making the use case potentially interesting, but also questionable in a sense. And would not be surprised. And building on what Uzair said relating to the UK, that there will be, relating to the use cases, very different assessment relating to what is going to be proposed. But it's still, again, under investigation. Does it answer your question in a sense?
Yes.
Okay. May I shortly interrupt? I think if you read this old Crunchbase article, The Good, the Bad, and the Ugly, it sums up everything in total. And I think we are also seeing here in this call the different players. I mean, I would call myself a dinosaur. I founded this e-money institution, which is based on the e-money regulation that got first introduced 2008. Actually, on the basis of this, PayPal got their license for the payment system. So I'm a little bit surprised of the European Central Bank that they are messing around in this topic, because the regulation for digitalized euro is there since more than 15 years. So point one, we have the same legislation, for example, copied in Brazil, where a digital AI is extremely successful. We just got the example from Nigeria, where actually the government, I'm sorry to say for my bad English, fucked it up. And that brings me to the point. So you have the legislation, you have the user, and you have the technology. A lot of the new technology guys are trying to desperately, since a couple of years, find use cases for this beautiful technology. And found a horse to possibly ride on, where the government also jumped on, is the central banking coins. And then you have this discussion, you know, is it private, is it open? To be honest, if it's just a locally run system, because Nigeria wants to organize it, actually they don't need a distributed ledger technology. An Oracle database would make it even faster and more beautiful. So, and I think in this triangle, this is very nice. That why is there a lot of discussion, and actually a lot of governments are involved, because the example is the Nigerian one that wants to get more control of their people. The Brazilian one had the same idea. They were more successful because they were not that rigid on, you know, cutting off cash machines. So they got much more transparency on their population. Most probably in China, the whole tracking people issue is also something why actually a beautiful technology is abused for political reasons. And that's why, depending on how strong the population is or not, this thing fails or not. But actually the failure of a governmentally, centrally run coin is more based on the political implementation than on the underlying technology. And I think this various parts when a government manages to put it beautifully together and has nothing like an e-money regulation, this for a state or even for a region could be beautiful, especially if you have countries where financial inclusion is still a topic, which from my understanding, the US is also a topic, because 25% of the people there don't have a bank account. And I think it's on the government how to beautifully put these things together, and then really additional value can be created. But value creation is not due to the beautiful whatever digital ledger that lies under it. It's more like, you know, the way the state acts, and the way this additional trust that actually comes with the distributed ledger technology is used to enforce the system. I think that's the important part. And the things where it works, the countries, you see that they beautifully executed it. And I mean, we heard about a couple of examples where, well, the execution was not so good, and so everybody doesn't trust and believe in it.
So it touched the adoption point, and it touched also what Bernard was saying before, but you're just saying it like with some other words, to the fact that we are mixing up everything, every use case we can have, instead of telling directly to the people what is the main reason we are building the CBDCs. So since there is a lack of education, and this is the point we're going to touch also, and people can't see the landscape of all of that, but people will adopt it, probably they will be forced to adopt it without understanding the main purpose of it, because we already have all the infrastructures and the systems that can do what is proposed by CBDCs.
Mm-hmm. That's a good comment, but I would also add on top of this, like Bernard said a great point about it will be addition to existing monetary system. But there are also countries which are introducing CBDCs as a replacement to existing monetary system, where the cash will be almost non-existent. And there are certain ways how you can implement CBDC. So it doesn't have to be ledger-based. It can be account-based, and you can hold the complete state of the accounts in Oracle database, as you said. And it's because it's also centralized by nature. It doesn't require a decentralized system to run it. So for me, when I'm thinking about it in a broader concept, it's very problematic to put blockchain into picture, because blockchain assumes distribution and decentralization. And using blockchain for something what is centralized, I don't see actually an added value there. Okay, we can discuss it further maybe with some third-party actors like payment providers, etc. But I would be curious also to hear your opinions further more about this.
But I believe it's part of the, let's say, the magic, because saying that it's blockchain based and whatever brings this trust. It's just thing, because the basic philosophy of blockchain is trust and decentralization.
Yeah, but
this has nothing to do with the blockchain, typically, in terms of the basic philosophy.
Yeah, but I have to argue in this one, because trust in blockchains you establish by consensus mechanism, and consensus mechanism is there for all the players in the game, which are distributed and decentralized, to agree on what is truth, so they can all trust each other. And once you have a central institution running it, I'm kind of curious to see what's the point of using blockchain there.
So it has no sense. It has no sense to use blockchain there.
Okay, we can continue with either Tobias or
yes,
Juergen.
I will come back to Juergen. I had a quick question for Juergen about the evolution of all this, since he has already been to the payment system and all of this. Tobias, please tell us, because I love your ideas.
No, I think I would love to just to add also what Juergen said, and Juergen said something I think extremely important. This is all about how it is actually implemented, and the implementation is depending on the motivation behind, right? And as we are talking about central banks and then policymakers behind, and I think also one of our speakers, Manal, mentioned it already. She said, yeah, this will be permissioned blockchain. I think we see a clear tendency in which direction actually this will go. And as you mentioned, also just one thing I think is very important to mention, because you said Petra in the beginning, we will focus on retail. Retail is very far down the road. I totally agree also with Uzair on this. as these are like governmental institutions, it will take a very long time, and probably then it's totally irrelevant. But I think we have also like the main use case we see in wholesale, right? And also like here, for example, in Luxembourg, and the Banque de France is playing with this, and there we see, okay, is this for a tokenization company like ours, you know, when we have tokenized securities and we want to do settlement, obviously we need another leg. Now we have like stablecoins like Tether who are doing the job very nicely. And I think like the central banks, they saw like a little bit of fear of missing out, like a little bit of FOMO. And they saw, okay, with their old-fashioned target system, they cannot provide like this kind of leg, right, to settle securities. And I think FOMO is in general probably one of the main leading motivations by implementing CBDCs, because I think for especially for the retail market, I see potentially when it is beautifully implemented with a lot of liberty and freedom, which I doubt will ever happen, then obviously it has some nice elements, because you can maybe like reduce transaction costs. You can hold your assets directly in your wallet, right? You don't need a bank account. This is also like one of the one of the main arguments people put up. It's a possibility for unbanked people, but I doubt actually that banks will completely be ignored in the system. And I think like the central bank also said it, right? They said, okay, we don't want to replace, and I think you, Bernard, also mentioned it. We want to have like a symbiosis system going forward. We want to have banks playing a vital role in our financial system. So I think like this argument with the unbanked is probably also like one critical to see whether it will be a real benefit. But I see like a lot of danger also there, right? And I was thinking about this recently, because we have like policymakers who are mingle more and more in our private lives, right? In Germany, we talk now about, for example, like a CO2 quota per person, right? Mm-hmm. And then imagine you have like a central bank money and no cash and nothing more in the system, right? And your mother is sick. For example, my mother lives in Berlin. You want to visit her, right, in the hospital, and you go on the website of an airplane company, and you book like your ticket, and then you want to do your transaction, and then it says like transaction refused because you have like already used like your CO2 quota for the year, and you cannot buy like an airplane ticket anymore, right? And that's I think this is like that's like the element of control, right? Which I see like it's like the biggest danger of CBDCs in the real retail context. In the wholesale context, I think there are definitely chances and possibilities, but then it depends on what kind of blockchain they're using. And obviously, when they all stick like to permission blockchain, I don't see like a use case. And I totally agree with you, Petra, a use case maybe of blockchain at all here.
That's a great point, because I think it's written on the papers that in terms of control, they will not have any restriction in Europe. I'm talking about Europe. They will not have any restrictions according to the goods or services you will be allowed to purchase or not. But since just before we were speaking about the fact that they're using a blockchain which is not really blockchain based, how do they guarantee to the population that this is an immutable rule? That next year they will not decide to change the rules for the people. This is also a kind of dangerous point for the population. And we have no information about that, just promises.
Absolutely. And I think like I just want to add something also on this point. I think Niamkey, that's a very important point. And I think I want to totally contradict here also Manal. I think like when you have like a permission blockchain set up, right? So you have very, very few nodes, and when these go out of control, so maybe like you don't have even access to your money anymore. This is a total different idea. Actually, what you would have when you would use Bitcoin, right? Because that's truly decentralized and it's working even if some nodes are going down when the central bank is issuing a permissioned blockchain with a few nodes, such a currency obviously when CIS are going down, right, you're going to even have access to your money anymore. I think the dangers are even like there also, like from a security point of view, much higher than actually when we would use public blockchain, because they are tested. Bitcoin has never been hacked. So in this sense, I think blockchain has proved pretty resilient in this respect. But I think we don't need it, right? We don't maybe.
Yeah. No, and I think that's always the purpose of the regulator, right? If you need another tool to put your population on a chain, I would say use an oracle, right? Because you can manipulate in everything. But for example, if you look at Argentina, where the trust in the central bank, I don't know, is at -0 degrees Kelvin, the pain point there is the trust. It's not the the currency, it's really the trust. Then they jump to any system that is more trustful and that where they have access to. And coming back to Africa, I think that's also a dinosaur story. This M-Pesa story, this electronic money that I don't know if it was Kenya or where Vodafone was extremely successful with it. Actually, people had two chances to bring family out of the big cities to their parents or brothers and sisters that were living in more raw areas, with either sending this M-Pesas, I don't know, I think the word coined at that point of time didn't exist, via mobile, or they got on a horse with the cash and went there. So it's always a question of pain point, and it's always a question of the government. Do they address it or not? The Argentina cases, they didn't address it. The M-Pesa cases, they also didn't address it, and some third party jumped in. And one third party was a mobile operator that was pretty clever. Most probably by accident it happened, but then was beautifully executed. And the same thing is the Bitcoin network in Argentina. But I mean, it's big there since the beginning, since more than 10 years. Mm-hmm. Just the more the democracy and the economy went down to the drain there. I mean, you know, what are you going to do with your money, right?
I have one little question for Juergen. Juergen, we can notice that you seem to have some kind of experience in the payments and digital finance sector in different places of the world. But let's focus a little bit on Europe, and according to what you've already seen outside of Europe, how is Europe evolving? Because if today we are trying to address a pain which is already addressed, it means that there is kind of a fear. And why do we have this fear? Is it because in Europe are we going maybe too slow, so the technology is going faster? So what is your take on that? Have you got an opinion? Have you seen how the landscape has evolved until today?
I mean, I think there is digital alternatives to cash money. I mean, I'm German by passport, so we still use a lot of cash. The same amount as the Greeks, maybe for the same or maybe for a different reason. Europe is slow in adopting new technologies, that's for sure. And I think, but there is the pressure to be innovative, to create something end. And I think that's why a lot of EU money was put into these initiatives to, first of all, I think understand what the benefits could be, and then in a second step to analyze if this would really be something that is applicable for Europe as a whole, or for parts of Europe, and so on and so forth. Because, I mean, we started a mobile payment service 11 years ago, and by that point of time, you could pay your coffee with cash, with credit card, with debit cards, with, I don't know, 25 different schemes, depending on where you were in Europe, with whatever card. So it was just something on top. And I personally experienced how hard it is to get distribution and to get into a market where there's actually no real pain point. And that's a little bit what I see here with this initiative. I think there's places on the world where it would make a lot of sense. But these places are usually also a little bit less democratic than I would consider Europe. So there is always the second intention. That's why, I mean, that brings it back, right? What is the pain point? How is it implemented? And then you see a chance of the masses adapting, because it's a network product. So it only makes sense if at least half of the population has it, or if you have a density in a certain ecosystem, however you design it.
Yeah, that's very insightful opinion and very insightful look into the CBDCs. But to further, let's say, broaden the discussion, I would like to list some benefits and maybe also explain that when CBDC is enrolled and when CBDC is being available to the greater public, there is also one thing worth mentioning, and that is that we would have to have governmental wallets, including digital IDs, to be able to authenticate and then to be able, again, to do KYC procedures, AML stuff as well, together with KYC, in order to be able to use digital currency issued by our central bank. We will further also discuss it with the dangers, but now I'd like to list the benefits so we can have a small discussion regarding benefits and how some countries are seeing it as well. So for me personally, the biggest benefit of CBDC might be efficiency, because you're able to settle the payments and deal with the cash flow quite efficient, because you no longer have the problems in between countries or between different banks in countries, because you're using a central system for payments. Also, one thing worth mentioning is a broader tax base, because everything is trackable, so you can tax everything. For governments, flexible monetary policies with, for example, COVID aids could be introduced, helicopter drops for the citizens which are in need, and maybe also with flooding or some natural disasters, some specific regions could immediately come to some certain amounts of money. Also payment backstops, because in the times of crisis, we might have a sound payment system which will not collapse or have any bad conditions for its citizens. And one which was already mentioned before, financial inclusion, which I believe it's the biggest point for me. So I would like to ask Manal, what do you think about those benefits? How you can see them from Singapore? Can you also add something on top of these things I've listed from our previous discussion?
Well, I guess you have listed the most important ones and the most impactful one, I may say. Of course, the efficiency and speed, as you have mentioned, are the biggest ones, and also the monetary policy. Maybe just because I'm researching on the space, but I guess for me this is the most impactful one and the least risky, I may say, because a lot of people, they are more resilience towards CBDC, like retail CBDC, I may say. So I guess implementing CBDC for on central bank level, it's more helpful and less impactful for us as citizens, right? But for me, the geographical and the jurisdictions differences between the different CBDCs and the fragmentations that we have around the world determine those factors. For example, for a developing economy is not the same as the advanced economy with high digital payment adoption. When we talk about economies like China with the high capital control concerns, it's very different when we talk about small islands like the Bahamas with as you have mentioned, prone to natural disasters, or economies with high inflation. So each geographical or each economy may benefit from CBDC in different ways. So, for example, for developing economies, as you have mentioned, is more about the financial inclusion. We can see in Africa, for example, the mobile penetration in Kenya can be a catalyst for CBDC. Already, Kenya is very advanced in the fintech space because they have already that system that they can use, through their phone. They can send money through the phone. So I guess the implementation and the benefits of CBDC may differ from a country, an African country to another, just depending on how the mobile penetration is high or not. As you have mentioned earlier, the project for Nigeria, the INERA, could significantly boost the financial inclusion. But again, we have a lot of I guess we need to give a lot of education before implementing retail CBDC for high advanced economies with high digital payment adoption. For example, in Sweden, we can see that Riksbank is piloting the e-krona, and I guess, in my opinion, is one of the most successful pilots and the most successful CBDC projects, in Europe, but also worldwide, just because. As I have mentioned, Sweden has a big high adoption for less cash and more digital money. Of course, China has been the leader here in Asia, despite being a capital control country. And again, we have the Bahamas, for example, or the Caribbean countries where they have launched Gcash, which is a blockchain-based CBDC, and it's very important to put the light on those small economies who are prone to natural disaster and to make them more robust and disaster resilient moving forward, just in case something happens. Again, for countries like Venezuela or Argentina, the high inflation might be the catalyst for a big adoption for retail CBDC right away, because they can see that the value of their cash is useless, and they are willing to adopt the CBDC right away without without the fragmentations that we had, for example, in Nigeria, just because they can see what CBDC can bring to the table in such a short time, and it can literally help them to save their economic situation. So I guess when we talk about retail CBDC, we have to categorize which country are we talking about and which economies we are talking about, in order to give the advantages of each use case depending on the economical situation.
Can I quickly ask a question to you, Manal?
Yes.
Sure.
How do you fight inflation with issuing CBDCs? Because this is just like central bank money, right? So normally you print money and then you mint money. How can this be any impactful on inflation?
It looks like we have a fan of Bitcoin here.
Oh yeah. So I guess it starts from the monetary policy. So if in order to fight inflation, the central bank has to take different it is one step back. Before fighting the inflation, we have to have a very robust monetary policy to fight it. So by increasing interest rates, for example, the central banks
they just digital in the queue. By issuing, you said by issuing digital securities or fiat money, central bank money, in the end, you can also fight inflation. I was just confused.
But I can jump in here.
Okay, sure.
Okay, with digital currencies, you can make money expirable. So you can force the citizens to let's say, spend more money than they were supposed to spend money. And then you have a reverse mechanism compared to inflation, where you introduce more cash into the system. Here you decline the cash, and then you see the mechanism of what you can do with CBDC differs a lot from physical money, in my opinion.
It's just that the fact that it's digital, the fact to take back the cash would be easier.
I think I agree with Tobias. Just by digitizing, the dollar or the pound, you don't change the inherent value that comes from the stability of the economy, and what the central bank's larger sort of motives are. But so I see that, but I also see transparency and more targeted things being able to be done by using CBDCs, specifically in places like Argentina and Venezuela, where we've seen a multi-year crisis when it comes to stability of local currency. So I guess my question is really if it comes down to to the motives of each country introducing CBDC. It's clear that Asian nations or some of the countries in Asia, like maybe China, Singapore, not a clear democracy. So I don't want to get into that discussion, but again, from the Asian side, what we're seeing is a lot of it is motivated by control, and so transparency, flip side of transparency, almost becomes control for these economies. But the ones that Manal mentioned, Argentina, Venezuela, they have a real use case. But even if they do introduce CBDC, as Tobias mentioned, you're just trying not to say it in the wrong way, but if you repackage garbage in a new fancy packaging, it's still garbage, right? So there's no substance backing it. And so I see that as well. And I think this is very important because CBDCs essentially, in a broad sense, are a discussion about if money should be government or if it should be private or if it should be hybrid. And I think in certain economies, it makes sense to have a specific model. In others, it doesn't. Places like Argentina, where the government does not have that same sort of trust by the people, then maybe they should look at a more El Salvador-like approach, where they're just like looking at third-party private currencies like Bitcoin. Not that I'm saying Bitcoin is the ideal store of value as a currency, but at least it's a more reliable financial system that makes people or makes people feel assured that the value of whatever pesos or bolivars they have in their wallet is not going to go down by 90% tomorrow, which of course is a much bigger issue. So from my perspective, I would say the conversation is not so much about whether CBDCs are a good thing or a bad thing. I think ultimately it really comes down to in which economies, in which parts of the world does it make sense to have some sort of private or hybrid model that supplements government money. And I think we can talk about digitizing euros or pounds or dollars. I don't see that yielding any real value for anyone. I think ultimately the conversation really has to be about how much of it is controlled privately and how much of it is controlled by government. And going back to the US and UK, where the financial systems work, of course we're not seeing the value of the dollar or pound fluctuate the same way as you'd see in some countries in Latin America. So yes, in those situations, there is a question of what is the real value of the CBDC. And I think that even within the UK and US, they're two very different economies. For the US, sure, they might be able to see some value, but it's questionable because we know how the dollar has sort of dominated global trade, and by shedding more light on the current real status quo of the dollar, by making it all digital and open and public, I don't know if that's necessarily in their best interest. So going back to the original comment that yes, it is very important to consider the motive behind a CBDC and how it applies to a local geography, but keeping in mind the politics, that come into play. Sorry, I went on a bit of a tangent, but just wanted to make sure
that was great.
I hit those.
That was great. Don't get me wrong. We'll use a word that is well known in the cryptocurrency market, which is shitcoins. Like people building shitcoins just to build coins. So from that, what I want to stress on is, like Manal said, it depends on the use case, and you're like putting the light on that also. It's like people on the market now, when we have bull runs and whatever, they're trying to just create coins because they have the FOMO, the fear of missing out. So maybe in some countries, in some places in the world, we really don't need the CBDCs, but the institutions, government will try to do it just to catch the train. So maybe is it what are you maybe putting the light on? The fact that some countries may not need any CBDCs, but they will try to do it.
Yeah, I mean, it's again, it really comes down to the motive. Why is the country trying to do the CBDC? What
So the
value do
pain
they
points,
expect to
the pain
create? Well, maybe not even a pain point because, a pain point indicates that there's a problem. And so certain economies, there's a potential gain. You can get potential transparency or clarity, or you can enforce financial regulation in a more targeted way. So it's hard to just narrow it down to one specific pain point that applies to all the countries and all the general populations around the world. But there is something that Juergen mentioned earlier, and I wanted to sort of go back to it. I don't know if you guys are familiar. Recently, the Bank of International Settlements announced a pilot project that, alongside Chainlink Labs, which essentially is looking at connecting the different blockchains that currently exist. So they want to take, whatever 200 blockchains that exist in the world, come up with some sort of standard that connects all of them to create a much bigger sort of web of blockchains.
Yeah.
And so
commenting layer 0 for blockchains.
Yeah. I don't want to get technical. I think layer 0 is one of those shiny new terms, but anyways, they are looking at a cross-chain communication standard that connects different blockchains, which great. Now we're talking about if we had some sort of framework like that for CBDCs that was being done, then we could have a more global conversation around this. But the current, weak attempt at CBDCs that we've seen from most developed economies is really just driven by specific motives, as we know in the case of China, or we can guess very easily what that motive might be. We're seeing a lot of activity in the Middle East as well. I'm surprised no one's brought that up. Dubai's been doing a number of different tests and has run several different pilots. Actually, even in Thailand, I think there was last year there was a paper published. But anyways, my point is, at the moment the conversation is very distributed and fragmented, and I think it needs, in order for it to be a real global issue, we need CBDCs to really look at creating a standard across the different CBDCs around the globe, and that could potentially unlock a lot more benefit than having very hyper local projects. Again, there is a use case in certain scenarios like Argentina and Venezuela and perhaps other Latin American economies, but I just don't see it as something that we could talk about, that applies globally.
Mm-hmm. I would like to reflect on some things you said. There is always a problem of trade-off between transparency and privacy, and in some cases it's beneficial to have more transparency by reducing privacy because of the cost you get because the systems are not transparent. But in some other cases, yes, as well, this is a classic trade-off, and it's a well-known problem for all the technical systems. But also the second thing, Europe, and why CBDC might be beneficial in Europe. From my viewpoint, the only thing I see, it might be the speeding up of the transactions and of the flow of the money in the whole monetary system. Because money only has value when it's liquid, when it's in the move. And if we make it more liquid, if it make it more circulating, I would be curious to see what are going to be the outcomes of such situation. But I would like to ask Bernard, does he have an opinion on this topic? And what do you think about the potential benefits for European market for CBDCs?
Yes, thank you, Petra. I would like to refer to the idea of business case that was mentioned by Manal and by Uzair also, and also because that's key. And Tobias, also you said, maybe there is a business case for wholesale, such as wholesale settlement and so on. Well, this appears to me as a potential attractive business case because all this issue of settling securities, it's true that we've got the technology and the regulation and the partners in place to make sure that the tokenized securities be settled with less risk, with more efficiency. And potentially a central bank digital currency could play a role just because of the quality, if it is a digital euro. So that's a potential business case indeed, and not specifically for Europe, because those transactions are global, as Tobias could confirm. So that's for wholesale settlement. Other cases may be relating to B2B, treasury management. There might be a case for cheaper and more efficient intrabank liquidity and so on. You might think of tokenizing deposits and those kind of things. And it comes back to more efficiency thanks to technology and in a regulatory framework that would be all right. Concerning the business case of cross-border payments, well, in Europe, it's already well developed. It's true that it's not cheap, but then you could maybe find a role for cheaper cross-border payments in line with financial inclusion. Question mark is for me retail, frankly, because it's true that it's a work in process in Europe, and let's wait the end of the year, indeed. But when you look at official intermediary statements and so on, it's very easy to identify what CBDC or what a digital euro might or will not be, as opposed to, well, it will be. And if you have a look at the frequently asked questions on the site of the European Central Bank, or the European, you read things such as, it will not replace cash, as opposed to, it will provide a use case in order to do something with cash. No, it will not replace cash. It will not disrupt banks. So again, what it will not do. Or other comments such as it should not affect privacy and those kind of things. So again, my impression is that there are lots of criticism have been sent to those work groups working on it, and that the current reaction consists essentially of ideas to reassure in the sense, well, a digital euro will not do that. And what I'm missing a bit relating to the retail part, the wholesale part is more, obvious. I'm missing a bit the use case and the vision at the end of the day relating to that. But I might be wrong. Let's in French you say laisser le bénéfice du doute. It's a long-term effort, a 2-year effort with very, very serious partners, with a lot of consultations and with experts from dozens of central banks working on it. Voilà. Does it answer your question, more or less, Petra?
Yes, it does. Yes, it does. Very, very, very well. Because we were taking a look like from retail perspective, but it doesn't have to include only retail perspective.
So yeah. It was very kind of complete answer. For my part, I still have to think about the benefits of CBDCs. At this moment, my favorite benefit is the fact that it's how the data are shared. Because if I understand, and we have some technical people here, today you have your money at the bank. What you see on your bank account is a display. So you don't really see, if you see 1 million, you don't really have the 1 million waiting for you there. We all know that. With CBDC, if I understand properly, it means that your money will not even be with the bank. Your money will be managed by the central bank behind your bank, which means in countries, you've spoke about some countries like Argentina, Venezuela, it can happen also elsewhere, even in Ukraine. So the central banks will be able to send directly money to the people in countries where we'll have some kind of disasters, where people would need this help without going through intermediaries who can cause corruption sometimes. So this is let's say, my favorite benefits of CBDCs at this time. But it's also involved the question of the data management, the information that we're sharing with people, which one will be displayed, which one is a sensitive data, which one is just a normal data. So I believe we still have to do a lot of research on that. And big players have to explain to the population how this is working properly.
Mm-hmm. Maybe we should ask our other guests, like Juergen, Tobias, what do you think about privacy concerns, especially here in Europe, because Europe has always been a very different market than some other markets regarding privacy and protection of consumers, of the end consumers. Who wants to go first?
As a benefit?
You can discuss it from whichever angle you want.
No, I don't know. Do you want to go ahead, Juergen?
Go ahead.
I love this.
I think no. I think like what I said also before. I think like okay, privacy is definitely a concern, right? And privacy vis-a-vis governmental institutions, right? And obviously we live in Europe in democracies still, and see that there's not maybe like that much as a concern as when you like in a plain dictatorship, but still I think also in democracies you have very noisy policy makers, and then suddenly, of course, you will have like a technology where you sort of control the data of the people, but also like the access of the people, and that's what I think is much bigger danger here than just like the state knows all the transactions I'm doing, and obviously it's that's like then you're totally naked in front of the government. But I think what is even more dangerous in this respect is the control, right? And this is what I mentioned, this example that you cannot maybe not even buy a plane ticket anymore because the transaction is blocked, right? Mm-hmm. Because somehow you have like, or maybe it's even blocked because you did not pay your tax also. It doesn't have to be so far-fetched, right? So suddenly, I mean, like the absolute control is definitely possible when you have central issued bank money on permission, specifically on permission blockchain, but also on public blockchain, right? Because it depends just how you write, in case there's a smart contract, or the framework around it. So in this sense, I think the absolute control angle is for me definitely one of the most dangerous parts of such a technology. I thought also about myself, like some positive sides. I think the wholesale guys we mentioned, I think I don't have like to explain again. And the other one, I think also like I agree. I think it's really like maybe the ease of transactions, right? So you can definitely maybe more cost efficient and faster transact money, which is central bank money. That's very interesting. Another thing I think, I don't know whether you want to talk about this because we are also in Luxembourg here, and we have also a lot of banks. I was wondering, what are banks doing when everybody has like central bank money? Because in the moment central bank money people touch is only banknotes and coins, right?
That's great. That's a great point, because my next question was just about to be, what's the role of traditional banks once we have central bank digital currencies? Okay. Because yeah, very good point. Please continue. Sorry to interrupt you.
No, it's fine. I mean, I was just wondering, right? Because when you look at because like we touch only central bank money in the moment, like as retail people, when we touch the coins and the banknotes, right? And when we pay like digitally, we don't touch central bank money because this is simple private money. It's just a claim against your bank, right? So this is not central bank money. And then what happens when we have like everything on central bank money, then you don't necessarily deposit with your bank anymore, right? Because you can hold it in your own wallet. Only for investment purposes you would use a bank, but and then when you look at the balance sheet of a bank, right, the deposits are on the passive side. But when there's nothing on the passive side, then there's also nothing on the active side. What is happening then the lending market, right? Is the lending market then trying out because there are no equivalent deposits anymore and the like. So I think like, this is not so thought through. So what is actually the role of a bank in the future when all the money is actually central bank money and not like right now private money and central bank money?
Great point. Great point, because I wanted to stress out this mental experiment. Let's say, what happens if we have governmental wallets and we are not required to deposit our money with commercial banks anymore, because we will not have the incentive to keep it there because we don't want to pay for the accounts because we have something for free. And this brings me to other question. How is this going to impact financial system and economic systems of each country? I believe this is like very hard to grasp at all, but we can also make a small mental experiment what could happen and what might happen. We might do it afterwards, but Juergen, I believe we still have to ask you what's your opinion on this.
I think it's hard to say. I would agree on what Tobias said. I mean, you know, if you that's why I like the public blockchains more, because the trust issue is given to the technology and not to the government. And no matter where governments on this planet, once they get into an uncomfortable position, they try to stay in power and they will use everything possible that they can use to keep the population under control, including restricting the access and movement of their funds. So every human being that sees this coming will find alternatives. The way the Argentinians did, this will happen. We're coming back to a pain point discussion again. So when you don't trust the government or you don't want to get tracked or whatever, you start paying with whatever. And I think that's in the human nature.
I just had a question that's popped up on my head now. I would like to ask to each of you, what is your favorite danger, number one, for CBDC? The main danger that you see from CBDC.
With whom shall we start? Maybe Juergen.
Yeah, you can go on.
I think it's controlling people.
Controlling people.
So for you, it's basically the erosion of freedom.
Yes.
Erosion of freedom. Okay, that's quite common when discussing CBDCs, and also quite dangerous in my viewpoint. But also there are some other certain dangers coming out of that aspect. But let's continue asking our guests. I'm really eager to hear what you guys think. Or maybe Manal, please.
Yeah, I guess like, you know, for as, you know, citizens, for us, the main concern is the privacy and the control that we will have over our wealth or our day-to-day transactions. You know, we may like, you know, think from now, like how the world would look like. I guess, you know, I'm a researcher in CBDC, but also I'm pro crypto. So I guess like, you know, a world will be more beneficial for like the decentralization. I guess like, you know, how we have achieved, you know, like $1 trillion market cap in crypto will not, you know, go away despite the regulations. So I can, you know, imagine a world where, you know, we have both CBDCs and decentralized, you know, finance, because even if like, you know, US or Europe will ban, you know, crypto, I still think that there are a lot of countries who will be like, benefiting from this, ban, and will allow more people to and welcome more people to do their like, decentralized transactions. So moving forward, I guess the privacy issue that we will have with the CBDC can be beneficial for the crypto market, and this is why the crypto market is still booming despite the macroeconomic situation that we have, inflation. Bitcoin is down, from 60K to 25K today, but still, if we compare it with other, like, assets, it's still up, I guess, more than, we did like 100% from FTX crash. So for me, I see like, a hybrid world where we have people who want to have a decentralized monetary system, and on the other side, countries who are having full control into CBDC or retail CBDC. So that's how I see the world. And for the banks, I guess, like, they will never disappear. They will stay here because we still need, like, interface facing, like, the consumers, either like, to take like a credit, either to, like for financial advisory. So I guess, like, the banks, they are again forced to change and to adapt with the current situation. They will not, of course, like disappear. They are just forced to change, just as they have changed with the fintechs, or like, with the era of fintech. Now they are forced to change with the CBDC. But again, the central bank is here for the monetary policy, not to face the consumers. Of course, we will have apps, ideally by the central banks. But again, the banking sector will stay here to face the consumers, and I guess, like, there is room for everyone in this financial market.
I totally agree. Yeah. And I believe the role of banks will evolve, and I even believe, according to the vision that I can guess from that, banks will have a more IT role that will be helpful for government to manage all these systems, since it will become more digital now. And we all believe that, and we all know how government prefer to be good on power than being good on tech. So someone will be responsible for the tech part and the financial part, of course.
That's a very good take.
Absolutely.
Yeah, very good take on it. And yeah, I believe we're going to live in interesting times. But I would be curious to hear more insights from the speakers.
The favorite danger of Bernard, for example.
Yeah.
Okay. But what I do not like are the negative unintended consequences, and it's difficult to predict. So, and I like the positive ones. So it's true that we enter a project that will allow programmable money. And so I would not like personally that my money use would be limited in a way I do not want to. On the other hand, it might open opportunities as well. And the second fear might be also an over transparency about payments. However, one can argue that it might already be the case today. There is just a lot of transparency relating to your payments via your bank. It's just more difficult potentially for government to have a look at it. So at the end of the day, I don't know, and maybe the fears that we can have now, we should not, because even without CBDCs, the fear should be the same. Does it answer your question?
Very, very good point. Also very good point, because it's not just about CBDC, it's also about, as previous speakers said, governmental policies, and politics in the end, and how it's adopted,
exactly,
and how it's actually deployed in general as technology. Who do we have left from speakers? Juergen? Did we hear Juergen's opinion?
We had different opinions, but Uzair didn't give his favorite danger. Can you see him like waiting to give us his favorite danger?
Yeah, I think from my perspective, the biggest threat is, of course, like things like privacy and control, they're part of the debate. But to me, that's that's if that issue is not resolved, we will not see any CBDCs come out, into the world and actually see them come to fruition. So I don't really look at them as the biggest threats. I'd say for me, if CBDCs ever do become, something that is implemented and used in advanced economies, I think the impact of that on innovation in the sector is probably what I would say is my biggest threat. How it affects companies that have already built technology that would do everything CBDCs would do, and so I would say from my perspective, so for folks out there that are working on CBDC projects, let's look at this more as a public-private partnership than try to give up more control to our governments and in the developed world. So I would say from my perspective, slowing down innovation in the space by taking the conversation one step back.
This is very nice. And Uzair, according to your profile, I have a question for you. Maybe some of our followers and audience will like this question if they like DeFi. Do you think that CBDCs will be helpful for the DeFi we know today?
That's a good question. It depends on, again, where, right? If you're talking about CBDCs coming out of Asia, China, that part of the world, probably not. In that situation, I see them being able to exert control, have more targeted ways to control the flow of capital. But I would say if this concept of CBDC, something that is more universal and accessible by anyone, does come to fruition, like we talk about it in a very idealistic way, and it flows freely within DeFi protocols, just like it would on government platforms, sure, it will be beneficial. But I'm a little skeptical, and until or unless I see something that is going in that direction, I will continue to be skeptical of CBDCs until we see something that that doesn't have that element of control, that ulterior motive being executed by the governments.
Maybe in 2, 3, or 5 years, companies like Ripple will propose some
But
kind
they're
of.
already doing it.
Yes, that's what I'm speaking about. I'm talking about them because they're already proposing those kind of protocols for CBDCs to work as we know the crypto working on the market today.
But I have another mental exercise. What if CBDC would have the same model as Zcash, being completely privacy preserving and protecting your transactions and using zero knowledge proofs to give you the set of claims which your tax authority can ask, which your bank can ask, which any of the institutions getting into your, let's say, the history of transaction can ask?
I believe this is also depends on the use case, because I'm not sure this will work in Europe, for example.
It will not work because of the regulations.
Yes,
because it's very hard to impose the regulations on top of something which is privacy preserving.
Yes.
Okay, so I will briefly try to sum down the dangers or the risks we've discussed. So we had the possible disintermediation of the banking system as one of the problems, like what is the role of the retail banks in the whole system. We had mentioned the miscalibration of the government involvement, including the trade-off between transparency and privacy. We've also covered, I believe, financial risks due to regulatory incapacity and lack of expertise as well, because we're dealing with highly technical products combined with politics and monetary policies. Also, there is this dystopian idea of combining CBDC with taxes and CO2 credits, which brings us to some crazy scenarios. I'm seeing a lot of those Instagram videos lately or YouTube shorts about scenarios where like we would be tracked for everything what we buy, and then based upon those things we would be charged tax. and which would limit our expenditure for travels and for meat example. Yeah, erosion of privacy, erosion of freedom, one of the most critical things for me when designing a CBDC. And I would be happy to see what are the scientific takes where academia has to say about the design of CBDC, which would tackle those issues in the right way. I believe no one mentioned technological vulnerabilities. If it's a centralized system, what happens with the exploits and hacks? So the system has to be extremely robust and resilient up to the level so it's impossible to hack. Because if it's centralized, this is also one of the design consideration of CBDCs, but in the end, if it's centralized, you have single point of failure system. So that brings me like to some other considerations when designing such a system. What kind of security measures should be undertaken to properly build that kind of a project? And I believe Uzair mentioned the threat to innovation, because if you have a governmental framework to do things, you're kind of backstopping on private sector to invest more time and money into building some other potential interesting solutions in this area. So, Niamkey, do you have some other thoughts to share?
Not really, because I think we had very good speakers here, and they've covered most of the points that we wanted to go through, and even more. What I will just ask before to close, would you rather go in the world with CBDC or not? I know this is let's say we can have many other questions around this one, but what is your opinion in a short way?
With whom
maybe Manal would can tell us.
Ladies first.
Always.
Well, I guess the CBDCs are coming, either we want it or not. Just like, to which extent our data will be used against us, that's the main question. Because in the end of the day, it's all about having central banks that want to have that insights towards our data. So if it is used for monetary policy, yes, that can be helping us, to avoid the financial crashes or inflation, or having a high or low interest rate depending on the economic situation. However, if that data will be used against us to be more to have less control over our own money, that's where the line should be drawn. However, for me, what is interesting is how the crypto market or blockchain, from a retail perspective, is pushing the technology. Before, it's always the centralized entities used to push, the technology, for the adoption. However, now we can see that, DeFi or other decentralized use cases are the one who are moving towards they are pushing the central authorities, either a central bank or governments, to adopt those technologies. So it's very interesting time to be alive, and I guess DeFi and central bank digital currencies, just to summarize, they have a way to be used from capital market to cross-border payments. However, as I have mentioned, it's all about that line that we want to draw towards our own privacy as retail CBDC. So in other words, yes, I am pro CBDC for our own good and financial inclusion. However, the amount of privacy that we will have over our own money, that's where the question is, and again, it's all about the regulation.
Very good.
Okay, great. Tobias, in few words, what's your take on that?
My best guess is that it will take a long time that CBDCs for retail will be rolled out, and then the question is whether it will be adopted at all. I think that's what you mentioned also, in your first examples. I personally don't see any benefit, obviously, on a monetary perspective, because I think whether you print money or you mint money, it doesn't make any difference. I see some positive effects with transactions. The biggest downsides I see is absolute control nightmare, right? What I mentioned as an example, then I think George Orwell's book 1984 is like just like a kindergarten, when you cannot have control over your own assets, and that's actually what I think is like then ultimately coming when they are rolling out. This will be a big time for crypto. So I think maybe like people will use these CBDCs for some transactions, and then for a store of value, they will convert it into Bitcoin.
Nice, nice.
Can I add something just to raise a point about monetary policy, right? Like, so we can think about it as when we are building a blockchain project or crypto projects, we always talk take a time to work on the token economics, right? So you have the burn mechanism where your tokens, they have the ability to be not to avoid inflation, right? So I think it's the same concept that we have in a central bank. So if we have CBDC implemented, the interest rates can be either the central bank can encourage spending or discourage spending by allowing as Petra, I believe she has explained it, that the spending can be either or less. We have why we had inflation after COVID, because the stimulus money has been given to everyone and it hasn't been tracked to the right place. So if we have CBDC or programmable money, that money can be only spent on healthcare or can only spend on education, and that's what can avoid the whole inflation that we have in the world. So I believe this is the comparison we can have between crypto projects where we work from investment point of view, we always work on the token economics to see if the project can be sustainable, investable, right? So we always make sure that there is a burn-in mechanism. I guess that exact technology or that exact concept can be utilized on a central bank level, and the money either can be burned but not really burned, but having less access to the money or not. Again, this is an utopia, but I think it's more hell than heaven, because if we are talking about that kind of CBDC, which is retail CBDC, we will already have less control over money. But I just wanted to clarify this point over monetary policy briefly.
Yes, I have heard the word utopia, because at this time, personally, I don't know the tokenomics of any CBDCs. So maybe you guys have papers about the tokenomics of any CBDC, but I really wish one day we had one. But this is a great point you just spoke about, because yes, people have to know that each time we issue a token or we issue a currency and whatever, there is an economics behind that. And maybe by making evolve this tokenomics of the CBDCs, we have something different from what we start to see now.
I agree on that point. Yeah. Further considerations?
Maybe Juergen and Bernard.
I mean, I have nothing to add. I mean,
nothing to add. We're great, and we took note of your favorite danger, and I will try to go deeper on that. It was a good point.
And I agree.
So great. So maybe Petra, you have something to add?
I'm very cautious around CBDCs because my career and what I actually do is somewhat security and privacy protection. So I'm very skeptical about it, how it will be implemented, in a sense that it protects freedoms we have as citizens in this world. And this is what I'm actually scared of. There are certain measures you can undertake, of course, to try to stand up and protect the privacy of citizens, but there are also regulations. And regulations and protecting privacy, they don't work well together. And I believe the biggest question here is going to be what the regulator is going to do with the legal framework around CBDC. And because implementation will just follow the regulations. And this is very difficult question for me to answer, because we're also somewhat involved in some CBDC projects, but only for designing security and privacy models. So from these considerations, I would rather be on the side of not adopting CBDC.
Okay, great point. So we've covered all the topics, and now we have the idea of everyone. For my part, I believe more in a hybrid system. I've been working on a kind of hybrid DAO since 2019, because for me, the only way that it will work in the long term is for the people to collaborate with the institutions to try to find a system where both of them work together. So for me, it's the only way that this kind of system, or CBDCs, as we've seen them today, will work on a long-term basis. This is my point of view. That was great. Nice podcast.
I really enjoyed it. So I would like to thank our wonderful guests for coming here, and thank you for your attention and for your comments to the discussion and your opinions. And if you would like to add something, please.
Thank you to all of you. It was very good. Thank you, Petra, for your time, for coming here for this podcast. Thank you for each of you, for our speakers. Very, very insightful. And you can find us on social media, on LinkedIn, YouTube, everywhere. For myself, I'm from ServiChain, and you can find ServiChain on LinkedIn. You can find Chorus, which is the app built by ServiChain, on Twitter. And Petra is also well represented online.
Just on LinkedIn.
Yes.
Just on LinkedIn. But for a broader audience, where can we connect with you guys? LinkedIn or any other social media?
LinkedIn, Twitter.
LinkedIn is perfect for me. Thank you very much. Thank you, Petra, Niamkey, and all of you.
Thank you. Thanks a lot. Thanks. See you next time for another
Great afternoon.
podcast.
Bye-bye.
In the future. Bye-bye.
Thank you.
Thanks.
Bye-bye.
Tschüss.